Welcome everybody back to the channel. Today we're going to be looking at technical analysis on the SPY, QQQ, tickers within those indices, as well as some indicators, as well as crypto, and a little bit of oil as well, and the yield curve. So let's go ahead and jump straight into it. Let's cut the bullshit. So if we look at the SPY on the daily time frame, the white lines are my support and resistance. If you're not familiar with that, there's also trend lines is in yellow. There's another one I'm going to be drawing here in a little bit, but there is something I want y'all to pay attention to about this rally that we have had so far, which was actually pretty nice. And if you look at it on the weekly time frame, it was really nice. As you can see in comparison to other weeks, it was a 6.62% gain on the week. And if you compare that to previous times that we had something like that, as you can see, we had a sell-off the last time, which was in May. And the time before that we had that was in March. We actually ran a little bit. So there's a possibility for us to sell off once again because we're overall in a bearish trend, or we could be going up from here. And since price action has been getting so tight within this falling wedge that we've been creating, it actually could be a possibility that we could be heading to higher highs now, at least on the short term, maybe not the long term, as there are negative fundamentals in the market itself. But as you can see, I drew the next trend line that I wanted to draw on the up top of a resistance. If you do have price targets in mind, or if you don't have price targets in mind, something else to be mindful is this gap at the moment. Let me find my rectangle tool to watch for resistance to the upside, as gaps normally do get filled, but they also can act as support and resistance. So be mindful of that if it does come up to the level within one trading day, throughout the trading week, whatever time it may be. I mentioned that I said this already, maybe not, was the concern about this poor volume. That was my concern on this rally that we had so far, as it's been lackluster, it's been declining, and as you can see, at times we have had selling pressure. It has been on increasing volume supporting the move, and these rallies have been basically fake outs. That's something to be mindful of. Not only that, but overhead price targets / resistance to watch out for is 395-ish area all the way up to the 400 area, as it could be hit this gap, the support resistance line right there at the moment, as well as the trend line at the top. Not only that, but if we look at some indicators, if we look at the RSI, also hitting that overhead resistance, possibly having some potential room to go, just depending on how you draw it. If you draw something like that, it leaves room for us to go for us to hit it. So that kind of supports you if you do want to go long. Let's also look at some indicators that I like to use. Some indicators I like to use are the standard deviation channel. We're close to hitting the middle, the mean, which is 0 deviation. And as you can see, it's acted as support and resistance in previous moves. On the way coming down, support. On the way coming up, resistance. And we're currently about to hit that here soon. Another thing to look at is the anchor VWAP deviations. We've been bouncing between the second and third pretty often. This last time before we had a rally, and this last time before we had this past week rally, we actually broke out of it on Friday with a moderate volume compared to the rest of the days. Again, just declining overall. So I do want to see some more volume come in order to support it. I believe it was just because of Monday's trading session not being there, basically. So because of the Juneteenth, a lot of times whenever we have a 4-day trading week, there isn't that much volume in the markets, leading to not higher volatility, but making it easier for big money to move the market since there's not as much volume there. Another thing to look at is the Bollinger Bands that I like to look at. Let me go ahead and turn this other one off because the lines are getting confusing. As you can see, the 0 deviation is coming up, which also could act as resistance in the low 390s. So if you haven't entered any type of position yet, look for that area right there, possibly to get a short-term bounce to the downside. Or if you're playing longs, these might be some price targets you want to look at, or some area of resistance you want to keep in mind when you're setting your stops or whatever you do when you're trading. You can also do look at the same thing on the QQQ. Let me go ahead and turn this off real quick. As you can see, we're coming up to this overhead resistance. If you want to call this a trend line, even though it technically only had like 2 areas in which it tagged 1, 2, could this possibly be the 3? Not only that, but you can also draw this other trend line, possibly, if you want to look at it this way. These could be the 1 touch. This could be the 2 touch as it came back to it. Retested it the 3rd time, retested it the 4th time, 5th time, and possibly we have room to run. Once again, heading up into the 300 area. Look at the other indicators that we got, such as the Bollinger Bands. We're already at the 0, so that's something to keep in mind, as it usually acts as a magnet before it bounces to the upside or to the downside. Standard deviation, also we passed that from the middle. Not only that, but if we look at the anchored VWAP deviations, we're currently between the -1 and the -2 deviation. We actually went through that pretty fast, pretty furiously. And if we look at the RSI is basically telling us the same story as on the SPY. Basically, just depending on how you want to draw this trend line. As you can see, it leaves us room to run, possibly to the upside slightly more. We could actually break out from here and actually have a sustained rally just based off of the fact how oversold we were and how fast we've gotten to this point. So if you look at this on the weekly time frame, the RSI, sorry, I meant to keep this RSI up. It's also something I want to mention for Bitcoin as well. As you see, we haven't really hit these areas since like major, I won't say crash times, but major crash times such as COVID. We haven't been in this area since 2018. Not even the 2015 market was this low. Not even the 2011 market was this low. The only time comparable to it that's been significantly worse was the housing crash. So it just depends on what your overall long-term thesis is. Do you feel like we're going to be in a recession? You know, we could go lower. If not, then this would probably be a good time to accumulate. And there's also some other indicators that support that as well that we'll look at here in a little bit. Some of the things I want to look at was also the tickers within the SPY as well as the QQ. The main holding of both is Apple. And as you can see, we've coming up to this resistance as well as this resistance line as well. From the trend line as well as the resistance line. Same story with the RSI. I mean, you could argue that we have a little bit of room to go before the RSI might peak out again. But yeah, those are just some areas to watch for resistance, whether it be the 341-ish area, which we're currently at, 345-ish, 344, or the 150 area. There's also some other ones you could draw in here too, like the 147.50. There's different things you could look at, but basically we're coming to that resistance line for the trend line, resistance. Let's look at Amazon. It's also there as well. And if we do run, another possible area to watch is that 126 that we peaked out at. It's also Microsoft, but Microsoft actually broke out with relatively decent volume compared to the previous days that it was declining, and then all of a sudden we got a nice little jump, and we broke out of that on that ticker. Berkshire doesn't necessarily have the same chart, nor does Meta, but it looked like on Meta we're barely bouncing off that trend line, that bottom trend line. So there's plenty of room to run on Meta. Nvidia, again, the overhead resistance. Google actually broke it as well with pretty damn nice, good volume. I feel like it's the stock split news, and it's also something I want to caution people about, just as y'all seen on Amazon. You know, the build up to Amazon's split was a run up. However, the day actually of the split, we peaked out and ultimately sold back off. So keep that in mind whenever you're trading for the Google stock split. You know, despite us getting this rally up to that point, it's good to keep in mind that it possibly could top out. So yeah, come on. Also coming up on that resistance, so that's something to keep in mind as well. We can also look at some different indicators like the market breadth. This one is for the SPY. The times we reached these type of low levels was the COVID crash, 2018. I forgot which one was a repo fiasco, and then 2015 as well, European financial crisis, as well as the whole housing crash. So I mean, if you're a long-term investor, you know, this also shows that it'd be a good time to start getting in. Not only that, just mentioning the RSI, how low it was. The VIX, however, is still has room to fall to the downside as it could hit this trend line. But if we do ultimately keep going off, rising, then we ultimately could see we could fall all the way down to this trend line. But something I mentioned in previous videos was to keep in mind that the VIX, I won't say that it normally doesn't, but it normally doesn't peak out till we hit these major peaks. Like you saw in COVID, like you saw in 2018 when we hit the bottom, when you saw with 2015 when we hit the bottom, 2011, 2010, the housing crash. You know, you saw these major spikes that didn't last that very long. We haven't necessarily hit that yet, so there's something else to keep in mind if you do believe that there is further downside to go. There would be more volatility, or there should have been more volatility. Another thing to look at is Bitcoin. And we've actually hit a lowest point that really we've ever reached before. The only time it's comparable was 2015, but even then we didn't even reach the lows on the RSI that we're currently at. So again, if you're a long-term investor, it'd be a good time to start accumulating. I want to start accumulating like under 20, but you know, you can't be too picky because you actually might end up selling yourself short and missing the accumulation phase. But something else to keep in mind on this is just in general, like these bear flags that we've gotten throughout that we ended up making out through. So, is this another bear flag that we could be experiencing? Let me look at this on a shorter time frame, like on the daily. If we look at this, bear flag building up at the moment, ultimately expecting it to break down, possibly hitting a bottom that we would like to see. But also looking at the weekly time frame, something else that I pointed out in other videos as well is how much volume are we actually getting on the weekly time frame. And it's comparable to some other peaks that we've had. We even had more than the whole May situation. Times we had this higher volume was whenever the trend shifted to the upside or to the downside. If it was up here, hit this levels, it'd be to the downside. If it hit up here, it'd be to the downside. Hit here, was to the upside. And that's something else to keep in mind, as we are seeing pretty significant volume within crypto as well. Plus, with all this fear that's going on with the whole Celsius situation and Binance with the withdrawals, the whole Luna, it really providing a good buying opportunity. And if you look at logarithmic regression, fits all the data. It does provide a good update on, that now is a good accumulation phase. Something else to look at, like I was mentioning before, is the whole oil stocks as they have been getting a breather. So whether we look at Exxon or we look at CVX, I probably shouldn't have done that. We're at a level of support. And we also look at crude oil futures. As you can see, we've had this trend line hold, ultimately broke below it, and we're retesting it once again. Could we get back above it? If we can, we could expect gas prices to rise once again. If not, then we can expect them to continue to fall. It's something good to keep in mind. Not only that, but if we look at the yield curve, it's razor thin, man. We could invert here soon. We almost did in June. Will we once again? I don't think so, unless there might be some news that comes out that really spooks the markets. Fed Powell hasn't necessarily said anything too bullish or dovish for the markets. So my overall thesis of being bearish, mid-termish, long-termish, is still going to hold at the moment. But overall, there's different ways to look at the markets, whether it be to the upside or to the downside. But be mindful that bear markets just don't follow logic. So keep that in mind, guys. Good luck in your trading week. And again, best of luck to everybody. Trade smart.